Hello everyone, Brother Al McClain with this week's stewardship video. And as we always start the same way, let's read the disclaimer. No advice should be seen as a recommendation or endorsement, as I am not a licensed financial advisor. This is for educational purposes only. You want to do your own research. If you have a registered investment advisor or a certified financial accountant or someone that operates in that capacity that you pay to do that, then that's what they're there for. Ask them specific questions regarding your portfolio, investment, or your financial plan. So this video is a tribute to the legacy of Reverend Ellis Ford, who went to be with the Lord on June 2nd. 2026. He was our assistant pastor for probably over 30 years at the St. John Baptist Church. And one of the things I distinctly remember about Reverend Ford is one day I was prepping for a Crown Financial class. It was one of the first times we had offered it at the church. And on the third floor is where all our classrooms are. And Reverend Ford was walking around and he came in the classroom and said, "Hey, Brother Al, what you doing here?" And I said, "Hey, I'm getting ready for the Crown Financial class." He said, "Oh," he said, "let me ask you a question. How much does the Lord say we should be saving as far as our every day or monthly or out of each one of our income or paychecks?" And I said, and it just so happened I had just read within the last couple of weeks in Genesis about Joseph and the plan he put together as a result of the dreams where Pharaoh did not know what was happening as far as these dreams, and he had gone to him with a plan, and that was in Genesis 41. I said, "Reverend Ford, I don't know if this is the right answer, but I said it's funny you mentioned that. I just read in Genesis 41, it's 20%." He said, "Absolutely right." He said, "And I've been following that for several years, and it's done well for me." And at that period of time, Reverend Ford actually changed the trajectory of my wealth building, and that's what I began to make a goal. And I might have mentioned this before, and I think I have. Me and Janine, my lovely bride, we've gotten to that goal and surpassed it. That 20% of our gross income goes to savings and investing. And actually, as I said, it's over that. And this is where we got that from. It was Genesis 41. And I'm using the Good News translation, and this is verses 34 to 36. Please go back and read that whole Genesis 41. But specifically, it says this is the plan that Joseph gave Pharaoh. It says, "You must also appoint other officials and take a fifth," and that's a fifth is 20% of the crops during the 7 years of plenty. Order them to collect all the food during the good years that are coming and give them authority to store it up, grain in the cities, and guard it. The food will be a reserve supply for the country during the 7 years of famine, which are going to come on Egypt. In this way, the people will not starve. And so, a couple of points that are coming out of that. First of all, the 1/5 is 20%. So that became a goal. And maybe if you don't have 20% right now, the thing to do now is to have a percent and begin to work toward that goal. Then it says to guard them, right? In other words, I had a big trouble of pinching off of my savings and buying stuff from a consumer standpoint. So whatever you need to do, maybe you need to put it in a bank that's not easily accessible, put it in investments that are not easily accessible or liquid, so that you don't go and pinch off of them like I had a problem doing. And then the other thing it says, during the plenty years of plenty. Now we've had unprecedented bull markets, very good economies, except, we got derailed during COVID. But during that time, even COVID, people's spending went down and the savings went up because we couldn't go anywhere. So guard it. And then during the times of plenty, then it becomes easier during times of less than, if you will, scarcity years where you keep doing that. And then it says, it talks about famine will come. And think of famine as like a recession, right? If we're going into a more lean economy. And it says in this way that people will not starve, meaning that you'll have those reserves, you'll have it in investments, and you'll have it, and you can have it in different tiers. You can have investments, you can have like certificates of deposit, you can have bonds, you can have different things that have different levels of liquidity. So, say you have it in a money market, those could be part of your emergency savings. Your long-term investments would be like your 401k or your retirement pensions or 403bs or IRAs. That's your more long-term, making that more illiquid so you just can't get to that. So make it a goal to get to 20% or more. And as I said, Reverend Ford, change my wealth legacy with those simple, that conversation of him coming by and putting those uh, verification, validation, if you will, words of wisdom in my life. So thank you, Reverend Ford. And so the book that goes right along with that Genesis 41 is Chuck Bentley. And I've mentioned this before. The book is called The Salt Plan, Chuck Bentley. And you can get it out on Amazon, a used copy for next to nothing. I think even a new copy is only maybe 20 bucks. 20 bucks is well worth investment into your wealth building. And for the main points, if you just had to summarize the book, included things like avoid debt, prepare for economic uncertainty, which we could be going to now with these high inflation. We're going to talk about that later. Learn from biblical famines, because it goes through that in one of the ones that highlights is the one that Joseph dealt with, and then reject cultural idols and serve God alone. So if you have to look at four of the main points in that book, those are the, it's an easy read. I encourage you to go out. The SALT Plan, it says How to Prepare for Economic Crisis of Biblical Proportions by Chuck Bentley. So let's change gears. Let's take a look at this week's earnings. We're winding down. We still haven't gotten to Nike. Nike is kind of the unofficial ending of the earnings season, and it kicks back off with Delta. But we've got this week, we've got Campbell, so that's looking into the consumer spending area. We've got Academy Sports. We've got Chewy, and we've talked about it before as I look over at my four-legged um, person, if you will. Deuce, Chewy, big market in the area of pet supplies. Got Oracle and Adobe. So that's going to give us a look into some technology and Lennar Homes. So those are some of the big ones for this week that are going to be reporting. But you can see we're clearly winding down the earnings season. Now, what's going to be interesting is look at Oracle and Adobe, because this past Friday, big sell off because of technology. We'll show that when we get to the overall market. Now, one thing I do want to put out is we're getting closer and closer to one of, could be a historic portions IPO, initial public offering. That's with SpaceX. And that is the company owned by Elon Musk that is going to be going public. And they're projecting that it will start trading on June 11th or 12th, which is next week, uh, under the symbol SPCX. So that's coming up this week. They're saying the target could be $75 billion overall value, projected at about $135 a share. So make up your own plan if you're looking at getting involved with this. I know a lot of times you have to be careful because sometimes they'll take off and you may buy it at the high end and then it falls off. So pray about that. Talk to any professionals that you trust to see what your plan may be. Now, there's another way you can play this is there's some funds out there that already own some areas of SpaceX, like Arc Adventure with this Kathy Woods's ETF. These are some different publicly traded mutual funds and exchange traded funds that now have some space exposure in there right now. So they're already, holders day one when it goes public. There's another way you can see. Here's an exchange traded fund, NASA, that has there's SpaceX exposure, 8.3% of the weighting within NASA. That's an exchange traded fund, not to be confused with the government agency, but the exchange traded fund is called NASA. You can see these are the top 10 holdings that are in NASA. That's a way to play it also. And then there's another, the expected IPO is an exchange traded fund called IPO, which it invest in initial public traded companies. Here's some of the holdings right now, and you could definitely expect SPX or SpaceX will be in there in the next couple of weeks. So that's another way to play it. Right now, it doesn't have it in there. So let's take a look at a couple of things affecting the market. So last week, there was a what we call hot jobs report came in, which means there were more jobs than expected added to the market. And this Fed, the new Fed chair, Kevin Walsh, he's now facing a kind of a perilous or kind of balancing act he's got to do. So with the jobs report coming out hot, meaning that there are more jobs being added, which means that that's kind of inflationary, right? Because people are asking for more money to go into these jobs. So that's pushing up the spending required for corporate budgets. And we've already got inflation out there with the war going on, energy prices are up, which is affecting also food prices. So now we've got this hot market. So that almost handcuffs the Fed to where not only they're not going to be able to cut rates because that's adds even more inflation pressure, but there is also news out there of a potential rate hike before the um, the year is out. And so here is a Fed Watch tool. The normal one I had, for some reason, the website was not working well, but this one I found, and this is projecting December 9th. The current rate we're at is 3.5 to 7, 3.75. So, and you can see over here, you look around the central markets around the world, that's the Fed, that's US Fed, 3.75% average. And you can see the ECB, that's Europe. You can see China, you see Japan, all the different ones from around the world. And we're seeing at 3.75. That's this here. So in December, it's saying that there's a 42.8% that there's a hike going from the like a 3.75 up to a quarter point, maybe 3.75 to 4%. That's what it's projecting in. And now, with this likely to happen, a couple of bullet points that I saw in some of the news, bond yield surge, which means that if you're a current bond holder, you want the rates to be cut. If they get, if the interest rates rise, that's bad for you, right? So this is a perfect time to be a bond buyer in hopes that you're buying it when the yields are high, meaning that people are demanding that you give me more interest. If I'm lending money to you as a corporate bond or even a government bond, I'm demanding the market or supply is saying, you need to pay me more because of the risk of uncertainty, inflation risk, because of government spending. You've got to pay me more. So the yields went up. So this may be a good time again, not a recommendation that you buy bonds. And what the hopes are is that the interest rates get cut, then your bond appreciates in value, right? So right now, here's how the market reacted to that jobs report. The yields went up. What we were just talking about. The stock market sold off. And I'm going to show you in that chart, it really sold off, right? I felt the effects in my portfolio. Some of you may not want to look at your 401k right now because there was a big sell off on Friday. And then now they're pricing in what we said, a 60% chance that there's a rate hike by October and 98% chance by December. And here's that December number I was talking about. So here's the sell off. Look at this. I mean, the last 3 or 4 days before the ended and Friday, it just fell off a cliff. I mean, this is QQQ. It was heavy in technology. Technology real, and I mean, technology's had a great run, right? Look at this. This is that box that we were saying it had been trading in for a while, and look how it took off. And then, whoa, what a dip! A lot of volume too. A lot of people were selling on Friday. We'll see if that continues on Monday. Here's the SPY, not as prominent because that's got some other exposure because the Dow was up. There was a lot of the Dow was like 30 stocks, blue chip, financial cross section. So you had a lot of other like healthcare. Those are the traditional ones that's defensive in nature. People were running to utilities, so it wasn't as a prominent sell off in SPY compared to QQQ and volume, but it still was a sell off. So that's this week's stewardship video. Um, As always, can't wait till next week to see what's going to be going on. Will the sell-off continue? Or, is SpaceX going to raise that up because of the huge prediction on how large of an IPO this is going to be? So that SpaceX offering could actually lift the market up by itself because everybody wants a piece of that. But there's also could be a adverse effect on the Tesla stock because some people are saying that people may be selling their Tesla stock to get into SpaceX. And there's also something out there where we've seen Bitcoin dipping down because people could be selling their Bitcoin to try to get a piece of SpaceX. So it's going to be interesting next week. But the only person who knows is the Lord. The rest of us, just guessing, right? The only one who knows is our sovereign Lord. But one of the keys is whether it's up or down, as Reverend Ford so wisely told me years ago, 20%. So whether it's up or down, continue that discipline of shooting for trying to get to 20%. If not, have a specific percentage. And while it's going up or down, continue to buy into that, because if it's dipping, then you buy it at a discount, right? You're looking for the long term. And so, as we always say, remember, Jesus is Lord, therefore he's the owner, but we're following all of his principles. It's over 2,000 scripture that are in the Bible that are related to money and possessions. We're following it as the faithful steward, what he has entrusted to us. We're not the owners, we're the stewards. We'll see you next week.